Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcast.
Now, one of the most simplest patterns to identify is, of course, your double top. We're looking at market setting a new high, declining down into a support, rallying back into a new high. Now, guys, this is simply a resistance level, and all we're seeing here on that second rally is just a test of that resistance. And again, if this market is going to continue to new highs, we need to see a break above that previous pivot. If we see a rejection there, now we have the makings of a possible double top and the potential for a continuation to the downside. We see it decline down into support again, and we basically get an M formation. And as I suggested with respect to a trade opportunity, we're looking for that break below that pivot point as a confirmation that that double top is actually in. Now, again, not 100%, but history has shown us that when these patterns form, as they start to break below this support level, there's a tendency of moving down to that next support. If we look at it in the opposite context, a double bottom, we see a new low playing into, again, what we refer to as a support level. We climb back to a resistance. We drop back in and retest. So right there, we know from our basics that if this thing is going to continue in a downtrend, we need to see a lower low. We see a price consolidation at that support and a bounce off of that. We see it play into this resistance, which is identified here at the previous pivot, and as it breaks above, we have a confirmation of our double bottom, or very simply our W formation, which represents the possibility of a continuation to a resistance level as prices move forward. Now, let's look at this on the CDD, the U.S. versus the Canadian dollar, and again, this is a daily chart. There's a couple of things that we can see on the smaller time frame. Now, I acknowledge this area here as being sort of a support level that we're watching right now, and yeah, we also talked about the idea of this being a resistance. Now you can see here that our prices played down into this support, bounced up forming a pivot, retested and here and closed above. We came down again, and now we formed essentially a W, which represents a support level and a possibility for a continuation of the upside. What we have to be cognizant of is that if we choose to enter based on, again, that simple pivot point break, that this area in here becomes a key level of resistance. And as you can see here, prices have actually rejected off of this level several times, and we're actually playing into this range today as well. But what we could do if we're looking at potentially trading this as maybe a short-term retracement on the U.S. dollar is we can look at this pattern that's formed now, which is essentially a test of a resistance, a breakdown into a support, a retest, and now a second test. We would then look at that pivot point as being an area where we would look at a possible entry, and just as we did to the upside, we look at this support level back in here as being our sort of our target one. So you really want to look at these key levels as sort of your targets, and you can be aggressive and identify targets further out, but recognize that this area here represents an area where there's going to be a possible consolidation and bounce based on previous price actions. So identifying these key support and resistance levels are critical when we're looking at these pattern identification, when we're looking at using patterns as a potential means of trading. Now, on the bigger picture, we can look at this particular scenario that's taking place, and that, of course, is a play into a resistance, a drop down here, another retest that's been taking place over the past few days, an aggressive entry, as I suggested before, would represent would be sort of identified here as a break below this pivot point. We would target this, but on the bigger picture, a drop below that area in here, and we would look at targeting back down into this lower price range. So as I mentioned, the larger the pattern, the longer it takes for the formation to take place, the more significant that move. Now, am I suggesting that we're going to see the U.S. dollar drop down and the Canadian dollar at par again? Is it possible? Absolutely. Is it probable? Well, if we see prices break below this area here, then yeah, it's absolutely a possibility. But when we're making our trade decisions, we're taking an objective point of view, and we're letting the market take us into the trade. We're not trying to convince ourselves one way or another. Okay, and that's very important.
Jason, I have a question for you.
Absolutely.
How long would you play that resistance support game before I would say, that it's getting a little bit late and you're playing the same thing over and over where the risk all of a sudden becomes greater than the reward? How many times before all of a sudden, the odds start to favor a breakout of that sort of range?
Well, you're still, again, you don't have a breakout until you have a breakout in that sense. I mean, you could look, I guess, at a smaller time frame, but I think that you still have these key support and resistance levels that you have to, you have to keep in mind. And, the last thing I think anybody really wants to do, like in this case, you see prices consolidating here, and what that's telling me is that, we're trading in a price range that really, it looks indecisive. Either both to the upside or the downside. So for me, I'm just stepping back, and I'm just it's on a watch list, and I'm letting the price action sort of dictate any sort of trade decisions, because again, and this is my opinion, you can certainly favor, a directional bias by, sort of looking at what the RSI is doing, but even your MACD is sort of showing just some indecision, and I would rather, wait, and see a break here, which we always identify. We always suggest that, if we do get a break above this 107 to 108 focal zone, that we'd be targeting the 110. But we also have to keep the window open for a possibility to the downside, and we're always we always have our price objectives in place before we take the trade. So I don't know if that answers your question or not, Steve, but it's all about probabilities. And right now, on the bigger picture, it's showing a significant resistance here. But on the long-term picture of the U.S. dollar, we can't rule out the possibility of a continuation in strength of that, particularly, with respect to the Fed's decision today of not lowering interest rates and so on and so forth. We could conceivably, as we actually did see towards the end of the day, a playback into these higher price ranges.
Makes sense. No, you definitely. Okay, thanks.
Okay. So, again, with that in mind, we have to also consider the idea of identifying continuation patterns. And I mentioned that when prices are in an uptrend, other than, I guess, the U.S. versus the Australian dollar, there tends to be a retracement or backfilling within these trends. And so what we want to do is we want to look for, certain continuation patterns, giving us the ability to get back in at a more favorable price. Now, again, the idea of identifying a continuation pattern is to find essentially a pause in the prevailing trend and a possible entry. Now, generally, these types of patterns take a lot less time to form than reversals, because really the market is, just think of it as the market catching its breath, a little bit of profit taking. But if the overall trend is to the upside, you're going to have some profit taking. But things have to line up to look more attractive to bring new buyers or new sellers into the market. And that's what these continuation patterns do. They basically say, hey, you know what? We're going to stop here for a minute. We're going to take some money off the table, and we're going to give you a chance, if you haven't already, to get back in or to get in, and that's really what we're looking for. So you generally see lighter trading volume, and then as the trend resumes, you see an increase in interest, whether it's to the upside or the downside. You see an increase in trading activity as prices start to move in that direction. We've got a couple of different types of patterns that we look at: triangles, wedges, flags, and pennants.
Thank you for listening to our podcast.